So guys, you might probably be wondering what could be those 5 top strategies you can actually use to trade in the forex market. Don't worry, I got you covered in this video. These strategies will also help you maximize profit and risks. So stay to the end of this video. Let's find out. So guys, we all know when it comes to forex trading here, you need actually a good strategy in order to be successful in the forex market. Yes, it's a must. You need a good strategy. And remember, you have to pick the one that works for you, because the strategy that worked for Mr. A may not be the same strategy that is working for Mr. B. So once you pick the strategy that is working for you, it's best to focus on that strategy and develop it in order to profit. So first up, we have the trend following strategy. This approach implies identifying and trading in the direction of the trade, that is, the direction where the market is moving. So traders use indicators like moving average and trend line in order to spot the trend in the market and in order to know the direction where they are going to enter in the market. So here, the major key secret here is to focus, be patient, and to ride along with the market, because the trend here is you riding along with the market. For example, if the market is going down on a buy with your moving average, you have spotted that the market is going to reverse, so you entered for a sell and you are reversing for a sell, you make profit. If your indicator indicates that the market is going to be going for a buy, you quickly come out, take your profit from the sell and quickly enter for a buy. So once you enter, once it goes on a buy, you are in profit, you cash out your money. So that is how it majorly works. And sometimes it takes patience, because along the line there may be some kind of retracement. So you have to manage your emotions and make sure you stick to trust your instinct. That is one thing. In trading forex, you have to trust your instinct. It's very, very important. So you have to be patient. So it's gonna help you for this strategy. So you have to trust your instinct. That is how this strategy works. And before you place that trade, make sure you are very sure you have studied that trend and be sure that the market is moving on that trend. Maybe make sure that your trend line, you have studied your trend line. And that is why I always advise, before you jump onto your real money, make sure you use a demo account and test run this strategy very well before you jump into your real money, to avoid unnecessary risks. But once you get your analysis right, yes, there's no doubt you are good to go. Your market is gonna enter. So what you need to do majorly is to have patience and focus. Have patience and focus, and make sure that you analyze the market very well using those your indicators. And I know you want to continue riding with the trend as long as possible, because you want to make more money. Yes, it's good. As forex traders, you want to make money, but I want to tell you something. You should get ready to exit the market once the direction of the market change, because trend can change at any time. Once the trends change, I advise you take out your money to avoid unnecessary lose. So trend is that you monitor it closely. It's not a trade you place and go and sleep. It's a trade you have to monitor. You have to monitor the trade very, very well, so that in case if they want to be in a reversal, because in forex trading there is always reversals. So in case if there any reversals coming, you see it coming and know what to do, and know if to exit the market or if to take out your market, anyone. So it's best to follow and monitor trend line while trading using trend line to trade. So it's best to monitor the market and know when to exit the market. Remember, the trend is your friend though, until you start going your opposite direction. By that time, you know that he has become your enemy. So I advise you take out your money once the trend change. So guys, the number 2 top strategies here you can use and trade is the ranging trading strategy. Let's look at it. So first of all, I want to clarify what is a range in forex trading. A range simply means when a market is moving on a particular direction. Let me say the market has been on a consolidating state. That is, let me just use this, let me show you an illustration here. For example, this is a ranging market. When you see a market moving up and down in a particular trend, in a particular box, is going up and down. Once it reach the resistance, once it reach the support, it resists. Once it reaches the resistance level, it support back. So that is majorly how to find out if a market is on a range market. So it majorly has no direction, it's just ranging. Once it reaches to a support level, it goes back to the resistance level, and once it is to that same resistance level, it's retracing back to the former support level. That is how you know if your market is ranging. Now, how do you trade this ranging market? It's very pretty easy. What you need to do is to monitor it, monitor the direction, know the support level of that ranging market, and also know the resistance level of that ranging market. Once the market is on the support level, you know what to do. Once you reach at the support level, you know you are entering for a buy, and once you reach the resistance level, you know you are going for a sell. So that is majorly how you profit from a ranging strategy. So it's very important to be sure that period of time the market is ranging before you use this strategy. Monitor it, be sure that the market is actually ranging to avoid losing your money. Yes, and make sure you find out the supports and always align this, because it's very important when you're trading in a range, when you're trading using a range strategy. Make sure you find out your support zones and your resistance zones, because that is where the trend, the candlestick will be hitting. Once it bounces on your support zone, it goes back to your resistance zone. Once it bounces on your resistance zone, it's coming back to your support zone. So once it reaches your support zone, you know you're preparing to enter for a buy. So once it goes back to your resistance zone, you have make your money and you have take out your money. Now, in this ranging market, these two strategies can work. You can sell and buy at the same time. Why? Because ranging markets don't take time to play out. Yes, they play out in some few minutes. Some that last long take 30 minutes or max 1 hour. But the ranging market don't last. So how you trade this is that you must be live on chart, monitoring your trade. So once you enter, let me use this example. Maybe the market has reached the support level, so you entered for a buy. So once the market reach your resistance level, maybe before you put your take profit before that resistance level and your stop loss below the support level. So once the market hits the resistance level, by then he has taken you out, he has hit your stop loss and you are in profit. Then once he shows you a candlestick of a reversal, you know what you are going to do next now is to enter for a sell and go down to the support level and put your stop loss before the support level and take your money. So that is how majorly ranging market works. So we all know that with ranging strategy, it's all about buying low and selling high. So you buy when the market is low on that support level and sell when the market is high on the resistance level. Please note this is very important. So we are gonna move to the next strategy, which is the number third strategy. So the number third strategy, the number 3 strategy is the breakout strategy. So now let's discuss the breakout strategy. What is the breakout strategy and how can you use it? How can it work? So these breakout strategies occur when prices branches the key support and the resistance levels. So here, breakout simply means when the market is moving on a particular trend, then all of a sudden there was a huge drop. That is breakout. That is, for example, the market has been going on a buy now, and there was a big huge reversal to a sell. That is what breakout means. Maybe we were trading on a buy before, the market was going high, then suddenly the market dropped low, or the market was going low, suddenly the market went high. That is majorly breakout. So how can you profit from this market? How you can profit from this market is watching the signs. The things that can help you in this breakout are majorly looking out for patterns. I know that many of you may not know what is patterns, but I promise I will do a video on patterns. I'll soon release my video on patterns, spotting patterns. So majorly, how do you find out breakout? There's a key patterns you are looking for here, and once that patterns occur, you will know that this market is sure that this market may actually go on a reversal, especially when if you see a double top or a double bottom pattern. So guys, breakout trading strategy can be highly profitable, but it's important to wait for confirmation. I always tell you that it's very important to wait for confirmation before entering a breakout trading strategy, because first breakouts are common. So be sure that you are using an additional pattern that can show you that really this market is going for a reversal before you trust that reversal and enter for the trade to avoid losing your money. So with all that said, now we are looking over to the fourth strategy, that is the trading scalping strategy. That is scalping trading strategy. Yeah, let's look at it. What is scalping strategy and how can you use it to profit from the trading platform? So scalping may seem intense, but I can tell you it can be actually rewarding for traders. How do you trade with scalping? Scalping majorly you enter the market and in lowest seconds, that is majorly is you watching the price action of the market. Yes, scalping majorly deals with the price action of the market. So is you watching the direction of the market, the action where the market is on at that moment. So one of the characteristics of scalping, you don't use a big time frame, you just work with a small time frame. For example, you can use a 1 minute time frame, you can use a 5 minute time frame, and you can use at most what you're using is a 15 minutes time frame, because you want to capture the little moment, the little seconds in the trade in order to make your money and you're out. For example, a scalping trade is that maybe you saw a quick move that this candlestick is going up, so you quickly enter for a buy, and once that candlestick has passed your buy where you put your buy, you quickly go out of the market and make that little dollar profit. And before you discover that the market is going to go for a sale, you quickly entered that trade and put it on a sell and cash out before the market reverses for a buy. So that is how majorly you trade scalping. Is sharp as e dey hot, as e dey be, you dey enter the trade, you are exiting it, you are making your money. So let me tell you, how did this scalping strategy become more dangerous? It's when you do not monitor the market very well. You do not test run this market, you do not use a good strategy on this market, and you went and now enter this market, and without you knowing the direction of the market, you just enter. Maybe immediately you enter buy, the thing will go for a sell. Before you enter for a scalping, you must be sure that the direction you're entering is actually the way the market is heading to. For example, if you have to enter a buy, you should be sure that the market is heading to a buy before you enter a buy. Otherwise, you will lose your money. So you have to be sure the market is going on a sell before you enter on a sell, and you'll be sure that the market is going on a buy before you enter on a buy. And make sure you don't exit the chart when you are scalping, because scalping, you want to find the shortest moment. It plays out in seconds or in minutes, so you want to cash out sharp, and also invest sharp. As you are entering the trade, once your trade is played out, you cash out immediately. There's nothing to leave, there's no way you are going. You have to be there and monitor the trade. That is scalping for you. And just remember to keep your emotions in check and stick to your trading plan, because it's going to help you in scalping a lot. And finally, guys, we have the carry trading strategy, which majorly involves a higher interest rate currency. Trader aims to profit from these carry trading strategies. So here, traders aim to profit from the interest rate between these currencies called carry. So carry trades can generate returned funds over time. It can generate return profits over time. And there you have it, guys. But remember, no trading strategy guarantees a 100% winning rate. You have to first of all test. That's why I advise, before you use any strategy, make sure you test it on a demo account to find what works for you, because what works for Mr. A may not be what is working for Mr. B. But I know that no how there must be one that you must find that is working for you. So stick to that one that is working for you to avoid unnecessary risks, and make sure that one that is working for you, before you jump into your real money, you have tested it on a demo account and you have made profits. If you're a total beginner in the market and you don't know where to start from, maybe you are just new to the market and you want to ask, they are asking questions like, how can I trade? What is even forex trading? I had you covered. So by my right here, there's a video here on essentials of forex trading for beginners 101. Make sure you click it and watch it. It's going to help you. And if you have found this video helpful, please make sure to like, share and subscribe to this channel for more content like this. So thanks for watching, and until next time, happy trading.